Jamen, jeg tror bare, du går i gang.
Okay. Thank you very much for the invitation, and thank you very much for joining to our session today. What I would like to do is I would like to jump right into the presentation that I put together to give you an overview of our company, Agillic, and then we can just save some time for questions. So Agillic, as it is a software as a service platform operating internationally within marketing technology sector. Our marketing automation platform enable companies to automate and personalize communications to their customers through all digital channels. If I give you a bit of a picture of the company, we have ended 2020 with 50.5 million revenue. Almost 100% of our business is SaaS-based. It's generated through subscriptions. We have been listed on NASDAQ First North since 2018. We have an award-winning platform, and it is currently servicing 92 customers in 11 different markets, and we are 47 people end of Q3 as it stands. We are operating mainly in data-rich company sectors. So these are retail, finance, travel and hospitality, technology, entertainment and gaming, energy, media. These are the areas that we operate quite heavily. And if you look at the market space as it is right now, there's an increasing demand for personalized communication from the end users towards the companies. So actually in November 2021, McKinsey just came up with the Next in Personalization 2021 report, and very interesting two numbers. 71% of the consumers expect personalization from the brands and businesses they choose, and 76% of the consumers gets extremely frustrated when they don't receive personalized communication from the brands and companies they choose. So in short, our technology is highly relevant for companies with large first-party data and interested to improve their customer experience, and they would like to capitalize on data-driven revenue opportunities. In the beginning of the year 2021, we have launched our Reboot 21 strategy. It included 3 must-win battles by then, and it was specifically growth of our business through internationalization, agile, scalable, replicable, and cost-efficient go-to-market model, and an operational efficiency to increase speed to market through partner-driven expansion plan. These were the 3 battles that we had to absolutely be challenged and then deliver on in 2021. On the financial side of it, we have defined 3 targets: double-digit % growth on AAR, positive EBITDA, and a positive cash flow from operations. And then we have delivered our guidance, and our guidance for both for 21 and 22 was 10 to 20% growth on AAR from 2020 to 21, and further from 20 to 22 it was 40 to 40% growth in total AAR. In the size of our business, of a $50 million revenue business, these are quite large targets, and we are quite pleased to see that we are actually operating on target. End of Q3, we have delivered our results, and I would like to give you a bit of a snapshot of that one. On the left side, what you can see is Q1 2020 all the way down to quarters. We are looking at our AAR growth. The last 4 quarters in a row, we have delivered the growth rate that we wanted to go after, and in total right now we have 16% total AAR increase from quarter to quarter. In the meantime, we have also decreased our customer acquisition cost 69%. And on top of it, we have also decreased our the number of months to recover cost of acquisition cost with 71%. These decreases are, of course, giving us tremendous impact on our bottom line, which is also another aim that we go after as a positive EBITDA. On the financial highlights, 12% total revenue increase, positive EBITDA, 85% gross profit, and 18.6 million cash at bank, which again is an important factor for us because we would like to make sure that we have a run rate that we can achieve also in 2022 as operational that we are running in an organic structure. The growth and Reboot 21 was all about a very detailed go-to-market strategy, and it has already shown its preliminary results. And we are in full commitment and hard work, leveraging all parts of our initiatives in the new year, upcoming year 2022. Our positive bottom line is also invested back on our growth, both on sales and technology side. And these are the number of people that we're increasing as we go into the next year. And I just want to give a quick update. Since last time I've been joining these sessions, we've been quite active on our engagement in go-to-market engagement in Germany. And when we do this, and we do it in a still, again, very agile, very replicable and scalable model, we first of all, we launched ourselves in Germany. That's number one rule. Second, we established marketing activities with our local partners. These are running in December, January as we speak. And then we also increase the number of local partners that we have so that we can actually go into the year with multiple opportunities. It's all about growing the base with the help of our partners and making the necessary impact. And then as I was working on this presentation, I realized we are almost ending the year. And then I just wanted to look back and I said, okay, what did we do and how much was it on target in regards to our strategic perspective in 2021? And these are all the snapshots of our press releases that we won out throughout the year. And every one of them focuses on the same Reboot 21 strategy execution. It's new clients, new partners, new internationalization, new markets, and opportunity to engage with new technology partners to engage to embrace our opportunities. And I think I'm quite pleased to see so far we are actually delivering quite a very strong delivery on our strategy as we're going to move forward into the new year 2022. Now, I also want to take a quite quick update on when we move into the new year. We are moving with two actually important additions to our C-level management team. Last week I've announced that both our CPTO, Chief Product and Technology Officer, that's a new role that we have established, which we didn't have in the past. It's a person who will be managing the connection between market, product requirements, product vision, product imaging into the technology and engineering, bridging the overall picture. Rune has joined us as of 1st of December last week. And Klaus Boysen, who will be our upcoming Chief Financial Officer, joining us from 1st of March. And they're both gentlemen are highly experienced in a background of technology, background in internationalization, international business perspective, and C-level management roles. So I'm quite pleased to see that we're entering the new year with even stronger management team, a strategy that actually shown it's already giving the effect that we are seeking, and I think we are on the right track. That is from me for today. So I'll take the questions. Michael, Mikael,
sorry, yes. Yeah. 11 slides in 8 minutes. Perfect, Emma. I was worried. But let's start with the first one of the first questions, a little bit detailed. Your transaction part of your ARR was a little bit high in Q3, kind of maybe sending some signals that the customer base you were the retail business and such stuff were again starting to awakening. Do you expect the same in Q4 and maybe also could keep that momentum going into next year on the transaction side? A little bit elaboration around that.
Absolutely. Transactions, as usual, I mean, it is not something that we control. It is in the hands of our clients and their plans and strategic decisions and activating the market. If you look at it from the trend perspective, every year Q3, Q4 are the highest transactional parts. It is a trend that always happens. But on the other hand, we're also experiencing everything is unusual. So we cannot just go back and look at what happened in 2020, 2021. Everything is new as we go forward, because every day is a new day for the market, for the companies we are operating in. But if you look at the general perspective, the market has opened. The the digital business is as much as the bricks and mortar business are both flourishing. So yes, we do expect a higher trend on the Q4, because we have Black Friday, we have the Christmas, we have multiple high-end retailers for the retailers, especially high-end solutions that will probably give a bit of a boost. Will it continue? That's something we are hoping, but it is again not in our control.
And I understand that, but and is that baked into some of your guidance? You need a higher growth next year, or do you really want to drive that by getting more customers in and a more stable subscription? So when you came with those expectations a year ago and higher growth next year, have you baked something in here, or do you want to get it more through the more stable subscription part?
Oh, absolutely. I mean, again, all our plans are based on subscription part of our business. We do not build our expectations on the transactional part of the business. It just tails up. But our focus is subscription-based growth, and that's pure focus on that one. In the new year, as we are going into, I mean, we have multiple initiatives running, and we are all seeking for the international growth with the large brands that we are engaging. When I say large brands, doesn't necessarily mean the brand is known. What is important is they are first-party data rich, they are actively engaging with their customer experience, and they happen to work in the large markets. That's a jackpot for us.
And the next question comes, Meta's a very well-known customer of yours, really has succeeded with their omni-channel strategy, digitalizing their business. So I guess you are also like to tell about that story, and you're part of it, and Meta's likes to tell that story. But here there's a question. When is the next sunshine story coming? Do we have something in store? Maybe you could share with us later. Do we have another customer where you're really seeing they are very successful with their journey, and you are a part of that? So that is the question, whether you will soon be able to share maybe the same success story in some other part.
Yeah, wouldn't that be nice? I mean, it is absolutely. I mean, we are extremely proud of our relationship with Metas and their maximum impact of getting the results that they're getting from the utilization of our platform. But let's not forget, Metas has been through a long journey. They have been building up this. This has not started last year. They've been on a long journey on the digitalization exercise. We've been working with them for quite a long time. Now, there are quite a lot of learnings that can be quickly implemented on the other areas. I mean, today, the new chancellor in Germany has just been announced. He's just been approved. And his #1 priority is digitalization of Germany. I mean, this for me, I mean, besides COVID, so digitalization of Germany, meaning that opening up the whole market into a new mindset. And Metas, alike companies in Germany, will definitely be our top of focus, because these are the companies that we can make a major impact very quickly. So hopefully there will be many sunshine stories, but we take it as a scalable model that we would like to make sure that we do it right, and once we establish it, it's a solid ground that we can grow further on it.
And then there's a question regarding, do you expect extra turbo by your customers after the corona? A lot of people, a lot of companies in this sector are now maybe worrying that they have pulled some revenue ahead of themselves because of corona and the digitalization. But if you look into your business, have you been on the other end of it and maybe seeing some extra need for your customers to put turbo or expand or accelerate in your area?
Absolutely. I mean, here's the thing. As I mentioned earlier, 76% of the customers, I mean consumers, are getting upset when they are not properly talked to by the brands they are choosing. Now, that means I'm taking this example because when you're upset, that means you move to the next one. So all the brands right now, they are in a terribly busy exercise to get their first part data in order and then to activate it in a proper fashion, because that is the only way they can actually stay in business. So the new world that we are stepping in, I don't want to call it post-corona. I want to call it, as we learn to live with the new realities, we are moving into a new world where actually everything will be data-driven, and it's very driven by the customers and consumers' requirements. So that's a fact. So I don't want to call it turbo, but that's the new reality that everybody has to live with. Otherwise, they're out of business.
And then a little bit on the competitor side, when you win a customer or lose a customer, who are you often facing? The big, the very large company that has much more in the palette, and this is a little area, you know, or do you meet some smaller ones? Elaborate a little bit about the competition.
Yeah, sure. I can define the competition into 3 layers. There are the very small single channel focus automation platforms. Take MailChimp, is quite known by everyone. You just want to send some mails, you just take it, you create an account, and then you just run it. It's cheap, it's easy, but it can only handle a certain number of emails, and it can only handle 1 channel. Then you have exactly the opposite side of it. It's basically the large enterprise solutions such as Salesforce, such as Oracle, such as Adobe, and these ones, they are multi platforms, meaning they operate within every bits and pieces of the company, from sales to distribution to finance to marketing in itself. And then you have those of us, which we are a part of, best of breed group, meaning we are unique platforms that we are the best in bar none of what we do. And there are different groups in that space. In that space, we meet with certain number of competitors from different places around the world. And we have also created a lot of partnerships in that space to actually make ourselves extremely unique and easier to engage with and easier to work with. If you look at the clients that we lose, why is it that, what is the main reason for losing our clients? There will be 2 reasons. One of them is they either move from best of breed perspective to a enterprise solution, and that is not because of marketing. That is a decision taken by the IT department for bringing everything together within 1 platform. Or we lose clients because they do not use our platform, because they bought a platform but they didn't have the right means, right organization structure, right data to work with it. So to be able to avoid that situation in the future, what we do is we run a very detailed ideal client profile process, so we do not engage with clients who are not ready to engage with our platform. Once we eliminate them, then we eliminate our churn in the future.
Sorry, Emma, I need to shut you down here, run a little bit over time. Thank you very much. Thank you for the questions. Next, the company is Neodynamic.